Working capital loans for restaurants. Learn about this popular type of financing. Call 888-653-0124 today or click the link in the description to learn more. We all know how challenging and competitive the restaurant business is. But despite these challenges, we've seen a recent increase in the number of independent eateries and small-scale franchise operations trying to make their way in this industry. Most fail, but those who work hard and find a niche can survive and thrive. Working capital loans for restaurants or bars are a great way to help your business get off the ground, and it is an intelligent way of borrowing money and investing in your future. With a working capital loan, you can help to improve your business and your cash flow and profits. The first step is to determine whether or not you need a working capital loan. This will depend on your current financial situation and what type of business you have. Suppose you already own a successful restaurant that has been operating for several years. In that case, you may be able to use your existing assets as collateral for a working capital loan. If you don't have any assets, such as real estate or equipment, you will most likely need to apply for an unsecured personal loan from a bank or other lender. You will also need to show them proof of income and assets. If you decide to go with a secured loan, you will need to look into different financing options available. These include secured line of credit. This type of loan requires some form of collateral, which could be real property, inventory, accounts receivable, or even equipment. The amount of the loan depends on the value of the collateral. Unsecured line of credit. This type of loan does not require any collateral, so there is no risk of losing your asset if you default on payments. However, the interest rate will usually be higher than a secured line of credit. Loans for restaurants. There are many different kinds of loans available for businesses, including restaurant business loan. This is a general term used to describe a loan made by a bank or other lending institution. Businesses and individuals often use it to start a new venture or expand an existing one. Commercial real estate loan. This type of loan is designed specifically for commercial properties. Many people use it for financing the purchase of land. Equipment lease financing. This type of loan allows you to lease equipment instead of buying it outright. Usually, you pay monthly rental fees and receive a set amount of depreciation each year. Equity line of credit. This type of loan is similar to a revolving line of credit, except it doesn't allow you to borrow more than you currently owe. Instead, it gives you access to a certain amount of funds based on your balance sheet. Working capital loan. This type of loan is designed to provide short-term funding for your business to help you cover expenses until you can make regular payments on your debt. Restaurant equipment finance. This type of loan allows you to buy or lease equipment to run your business. You can choose between leasing and purchasing the equipment. Restaurant franchise financing. This type of loan helps you to purchase a franchise. You must meet specific requirements before being approved for this kind of loan. How do I raise restaurant capital and make the most of my restaurant working capital? Raising money for your restaurant is easier said than done. There are many factors that affect how much money restaurant owners can raise for your restaurant, including your business plan. Your business plan should clearly outline all of the details about your restaurant. Include information like projected sales, the number of employees, location, etc. Location and market research. Knowing where you want to open your restaurant is essential. Also, doing market research will help you understand what potential customers in your area are looking for. Financial statements. If you have been operating as a sole proprietor, you need to prepare financial statements for your restaurant. These documents will show how profitable your restaurant has been over time. Annual revenue projections are also helpful. Personal guarantee. A personal guarantee is when someone else agrees to pay back a portion of the loan if you fail to repay. Personal asset-backed security. A personal asset-backed security is when you use something of value as collateral. Examples include cars, boats, and real estate. Inventory. When raising capital, it's best to keep your inventory low. This way, you won't be required to sell any of it to get the cash you need. If you're interested in opening a restaurant but don't know where to begin, we recommend contacting us today. We specialize in helping small business owners find financing solutions for their restaurants. Our team of experts will work with you to create a customized solution that fits your needs.